In today's episode, I want to share something very exciting to you guys. This knowledge that I want to share with you will help you in your trading journey. It's all about risk management skill. A lot of persons have blown their account because they don't have the skill to manage their account very well. But with this episode, I believe that after this episode, you can never blow your account anymore because I'm gonna reveal the secret behind risk management skill. After this, there are some certain things that will show you some key level that I will share with you here that will help you to make a lot of money when it comes to forex market. And the good thing about this risk management skill that I want to share with you now is that you can use it to trade any kind of market, be it crypto, stock, or indices. Even synthetic indices, you can use this same strategy and make the market. With that being said, let's dive in. But before we proceed, I would like you to share this video with your friends. If you are just new person to this channel, please subscribe to this channel. Don't forget to turn on post notification button in case of any content being uploaded in this channel, so I'll be first to be notified. With that, let's go in. So you can see now this is AUD USD. Let me go to like a 1 hour time frame of 30 minutes to show you how this thing works. And another thing about this very thing is that if you're using mobile device for your trade, you don't need not that trading view is not necessary. It's good to use trading view, but I use MT5 while trading on mobile device. The reason is because of the features. When it comes to this profit calculator and other things like your stop loss and the position size, you need to apply some technical tools to get the accurate result. But instead of making use of your calculator to calculate minus plus this and that, you go direct to your MT5 interface and drag the tools and get the accurate result that you need to work with. So with that, let's go on. So from this place now, you can see this is AUD USD. But let me go to 30 minutes time frame, check some certain things. So this is 30 minutes time frame. As you can see from here now, we have this kind of downtrend here. So but from here, my analysis, for instance, if you are to take a buy from this zone, if you are to take a buy from this very zone here, this very zone here, so there is one thing. This is other block here. You can see this is a other block, and I marked this other block down here. What I'm trying to review now is how to trade with proper risk management. I believe that after this tutorial, you can never blow your account again unless you are not serious. If you finish watching this tutorial and they got your account blown, that means that your trade is not meant for you. Please just go and learn mechanic, because this trade is not meant for you. Leave forex alone. If you blow your account after this trading strategy, you are not meant to trade forex. Now you can see that this is my order block, which I know that every one of us know what order block is. So this is a bullish order block, this red candle here, which I have marked from here to this end. And the market came back to retest the same order block, which you can see here. And my entry time, because for instance, let me say that I got this in from this 30 minutes time frame. I will use 5 minutes to enter this trade because I don't want my stop loss to be too wide. So I will go to 5 minute time frame for this entry confirmation. As you can see from this very zone, this is the order block again we are talking about. This is the bullish order block here, and you can see there is a very big fair value gap here. And if this is a fair value gap from here to here, so this is a valid block. When it comes to this, it's a valid block. Then, as you can see from this zone self, this place is a liquidity, and this liquidity has been taken to this side. It's been taken. No, if you want to enter this trade now, where will we enter? We enter this trade from this beginning of this. We place our order at the beginning of this candlestick here, which is this block. So, if I to do that, let me say we mark this place as our entry. This place our entry. Let me say. On top of this as our entry, and our stop loss will be at below this zone, where our stop loss should be. So this is a liquidity. Here you can see this zone is a liquidity. You can see. So Let me go back to 15 minutes so that we see what I want to do. Let me take this up a bit. So you can see from here, this is where I will enter this market. My stop loss should do, I think, below this zone, and our TP will just be here. Let me just say 1:3. And the one rule about this, let me just tell you guys something. The first rule is that any trade that doesn't give us to 1:3, we are not going to take the trade. That's simple instruction. Any trade that doesn't give 1:3, we are not going to take the trade. Anything below 1:3 is not a valid trade to take. That one is the first instruction while trading with this risk management scale. But anything that gives above, like 1:7, 1:10, 1:8, we are good to go. But 1:3 is minimum that we take here. So from here now, you see that from this trade now, here is the entry now. This is the entry. We will drag these two. It's inside your MT5, even your MT4. I'm talking about mobile device. You cannot get, it's like the MT4, you can get it in your mobile device, but you cannot get it accurate like this one. You cannot measure it like this, accurate like this one. This only MT5 that can see this. So you drag it to the point that you will enter. You will place your order. This is the enter. You hold it and measure it to the up like this. You see, we are having 409 points. Like we're having 409 points from here to here. And then from here to where our stop loss will be, like our stop loss, let's say our stop loss will be here. Let me just draw a horizontal line to our stop loss zone. This is our stop loss zone. So from here now, let's see that here is our entry, which gives us 409. From here to here, did I get it right? 11 bar, give 4, this is 422, 425 points. And then from here to our stop loss is what? 81 points, which is what? 8 pips. 8 pips stop loss. And our distance is 42 pips. So what we're gonna do is you go to your calculator, you divide it by 10. We have our TP is 425 divided by 10. You divide each value you get by 10. 425 divided by what? By 10. We have 42 pips. I've seen it. So 42.25. So then we go to this one. We have 81 points. 81 divided by 10. This is how we get the value. We have 8.1 pips stop loss. Are you seeing it? We have, this is where we are talking about. This is our TP. This is where our TP should be. For instance, this is where our TP should be. So we know that from here to here give us 425 points, and from here to here give us 81 points. So you divide each by 10, you get the value. The value of stop loss is 80 pips. Then the value of our TP is what? We have, I think, 45 pips. So for the 45 pips, what we're gonna do right now is to divide divide each of the value by 10, and we get our pip value. Now, after the pip value, after you might have gotten the pip value, what we do is to go to this website. You go to this website. I will drop the link in the description below. You go to this website to get the accurate result of what you will do. Remember that any trade that doesn't give us 1:3, we are not going to take it. Now, when we talk of 1:3, what you will do first is to check this thing. You check your calculator. You divide 8 by 45. I believe that it's more than 1.3. Let me go to my calculator first, so that we see what I'm talking about. So this is my calculator. So anyone that doesn't give us that 1:3, we are not going to take the trade. Let's check now whether this one will give us 1:3 before we continue. So first of all, we have 45 divided by 8. Let's see. We have 5.6. That is 1:5. It's a good trade to take. So anyone that is below 1 to 3, we are not going to take the trade. So let's go back. Now, as you can see, from this very place now, we go to this website. This is where I will drop the link to this website in the description below, where you can get this lot size calculator. So what we are trading from here is like we are on AUD USD. Let's go back. So let me say AUD USD. We are trading AUD USD. We have to change. This is USD. Then the instrument we are trading is AUD USD. So let's change this one to AUD USD. So AUD USD is here. AUD USD. Shit. AUD USD. Yes, this is what we want. AUD USD. Come on, take it. Okay, this is exactly what we want. I don't know what's wrong with you. Okay, it's back. So now, the instrument now is on AUD USD, which is what is here. So the analysis was on AUD USD, and then we go back to that very website. You see AUD USD, and our currency is on USD. Now, we have let me say we are trading with a 5,000, or let me say 10,000 account. Our account size is like 10,000. Let me say 10,000 account, and our risk, we risk 1% of account in each trade we take. We risk 1%. So from here now, we risk 1%. This is the instruction. As a conservative trader, you risk 1%. 2% is high risk. I normally risk 1% of my account size. So now come to this position, this stop loss. This is stop loss. So what is the stop loss? The stop loss is what? 8 pips. We have 8 pips stop loss. Now you calculate this. If you calculate now, it will give us what we lose if we lose this trade and what we gain. Are you get what I'm saying? So now let's calculate. Can you see AUD USD? The currency on USD, the stop loss value is 8, and the account size is 10,000. Or let's say let me just use 5,000 for now. Let me use 5,000. I believe that every one of us can afford 5,000. Okay, let's just use $5,000 as account size. So even if as I'm talking to you, this very strategy will help you to pass every prop firm that you want to trade, no matter their rules or whatever. You can pass your prop firm freely. Okay, look at this thing. It's 5,000 account. I believe that the minimum that most of the prop firm gives is like 5K. So this 5,000 account, and each trade you take, you risk 1% of the account, which is $50. Now let's go. Now let's calculate. It will give you the lot size that you use to trade. That you trade comfortably. You don't need to panic. And this will help to build your emotion while trading. Okay, let's just see what will happen right now. So let's calculate. Let's calculate and know what this thing will give us. The lot size, look at what will happen. The lot size, this is the money that we risk. $50 is at risk for this trade. And then the lot size we use to trade this is 0.62. Let's say 0.62 or 0.63. Let's just say 0.63. 0.63. And then we lose what? You lose what? You lose what? $50 per trade that you take. Okay, now let's just go to our calculator. You lose 50 for this trade now. This is our TP value. If you lose this trade now, you will lose only $50. And if you win this trade now, let me say multiply by 50. This is what we get. You multiply this by 50. This is what you will get. $281. Are you seeing what I'm saying? $281 for this trade now. Imagine a prop firm that gives you like let me say your first evaluation phase, like let me say like maximum 8% of it, or 10%. Let me say 10%. Like 10% maybe is 500. I believe you will get it. You take this like this kind of trade like 3-4 times, you will pass the first phase. If you get this kind of trade like 2 times, 3 times in a week, you pass the first phase. The second phase, the second week, pass the second week, they get you funded. Okay, now let's go. Now, for instance, now imagine where you take like 10 trades in a week, 10 trades, and each one you lose 50. That is 10 trades, 50 multiplied by 10 trades, and they happen to be that out of that 10 trade you lose 6 and win 4. Then what we do now is 50 multiplied by 6. It gives 300. You lose 300 in a week. Each trade you take, you lose 50. And out of 10, you lose 6 trades. And what you lose 6 trades out of 10, and your losses ends at $300. Now, 4 remain. You won 5. You won what? Let me say like you won 4 trades. So 4 now. 4 multiplied by 50, it gives what? 200. Are you seeing it? This 200 now, you multiply it by 3 because our principle states that any trade that doesn't give 1:3 is not worthy to trade. So you multiply by 3. Some will give you more than 3, some give you up to 10. So we multiply this thing by 3. Multiply it by 3. It gives you 600. Are you seeing it? So no matter how you lose, you will not lose your account. You will still make profit. That's the reason why I say that after this trade, if you still lose money and blow your account, that means Forex is not meant for you. So let's go back. So this is exactly how it works. If you want to trade this kind of instrument, you can never lose your account when it comes to prop firm trading or even your own account. I will advise you to stick to this risk management skill. Okay, let's just go to another one. Let me just shock you. Let me go to this. This is a GBP card, 30 minutes time frame. Let's take this in for instance, like from here now. Let's just take this market. Let me just take this week analysis. Like from here now, market clear this low here. Took this low. Why? Clear high. Clear high, clear low, then you mark out this week. This is where I'm interested. You mark this. So and the market get to this place. This is our where we'll be expecting the first TP. This is where we'll be expecting the first TP. This will be the second TP. This will be the second TP. First and the second TP. So now from here now we go to 5 minutes as usual to enter this trade, so that we get the accurate result. I'm sorry for this thing is delaying. I'm having poor coverage right now. So from here, where is this thing located, please? So I'm sorry, what is happening? Where did I even mark this? Oh my God. Where did I even mark this? Okay, this is it. 5 minutes. 5 minutes. I want to enter this in with 5 minutes. Okay, from the 5 minutes, you see what I'm gonna do. You see, this is too big. We have to minimize it. Have to minimize it to this very block at 5 minutes. You can see from here now. Our entry should be at this very zone. So we're gonna do. We go back to 30 minutes so that we can see it very clear. So you can see it very clear. Let me just carry this up a bit. So from here now, you mark out, let me say our stop loss should be at above this zone a bit. Yeah. Then our TP should be here. Let me say our TP. Is this one the one time marked? GBP card. I don't think. Let me just check. No, I have a lot. Okay. If that be the case, let's just analyze from this place where I saw that I don't think whether it's the one that I marked, but let's just analyze on it. So from here now, let's say our TP should be at this low, the body like this. Then our stop loss should be here. And this is our entry. Our entry should be here. This is our entry from here. Our entry should be there. Then we drag our measurement to. This thing is available in your MT5. Check it with your MT5 mobile device. You can see it. We drag it from here, this very place. This is our entry zone to this place. This is our stop loss. Our stop loss gives us 143. That is 14 pips. Then our TP gives us 766. That is 76 pips. If you divide it by 10, it gives you 76 pips. So now we have 14 and 17. We have 14 and 17 pips. Then 14, that is 7 and 74, 76 pips. 76 pips divided by 14 pips. It gives us 5.4. That is good trade to take. If we are now to take this into our profit calculator as usual, you see, for instance here, we are trading on, let me just do the same thing with this AUD USD, or let me check it, let me check what currency, GBP card, let me check GBP card, GBP card, this is it here. So let's go to, this is GBP card as usual. So what we need now is to transfer the parameters here, and we get the same result as usual. The same result that we got from the other one is what we get from this one now. Let's just wait and see what this market will give us now. This is GBP card, and our stop loss value is what? 14 pips. 14 pips. And then we risk what? We risk what? 1% of this account. You calculate it. Calculate first. We trade this in with 0.48. 0.48 is what? Your lot size. And if you lose this trade, you lose 50. You lose 50. Let's go to our calculator again. If you come to our calculator here, this is our calculator here. This is our calculator. Okay, let me go back to this. Okay, calculator. If we lose 50, and if we lose it, it's only 50 that we lose. And if we win now, we multiply this our take profit level by 50. Multiply by 50. We multiply it by 50. It will give us $271 for this one trade. This is exactly how this thing works. You don't need to begin to punch your calculator from this. We have 0.922 minus 0.6799 to get the stop loss value. No, this is the simplest way to manage your trading account, and I believe that this very strategy will help you to make a lot of money while trading this forex market, because you don't need to be calculating. That's the reason why most of the time they say you need to control emotion, greed and fear. Nothing like greed and fear when it comes to this risk management skill. If you have this risk management skill, nothing like fear, nothing like greed, because you know where your stop loss is, you know where your take profit. You're nothing like I don't have a high risk tolerance. No, if you apply this risk management skill, you're gonna make a lot of money while trading this forex market. Forget about the story of this and that. Buy nothing. You can do nothing like that. You don't need to buy anything. You don't need to bring expert to do this thing for you. It's very simple. You can do it with your mobile device. Just stick to these rules, and you will make a lot of money while trading this forex market. Thank you for watching, and stay tuned for the next video. Next video, because me and my team, we are working on some prop firm that we want to trade. We want to buy on this September to October. I think from next video that we upload will be on review about this consummate trader, because we want to go to consummate trader very soon. I would like you to stay tuned for this upcoming video. because we're gonna discuss a lot. And I would like you, if you have not joined our team, I would like you to join our WhatsApp team and our Telegram, where we discuss about trade. We share free knowledge and insight on some prop firm that you want to trade these days. So if you are just new, try to join the group now, because we are live now. Even there's some competition that is ongoing now. If you are just new to this channel, please, through the description below, you can get the link to the Telegram, even the WhatsApp link. You can get it there. So join us that we make the money together. Thank you for watching, and stay tuned for the next video.